Markets now, we'll take an international perspective this afternoon because we've got the globe-trotting Jameel Ahmad back on the line in Cyprus, joining us again. Jameel, good to have you back on.
Thank you very much for having me.
So look, you're back actually from a trip that took in China and Indonesia. You're just back from Jakarta, back in Cyprus now. A couple of things I want to talk to you about. Obviously, Chinese numbers we've been discussing on this program the last couple of days in this segment. Another thing, I guess, on your agenda, OECD global forecasts downgraded. Are they the two things you're really looking at, Jameel?
I tell you what, talk about the contrast of two different corners. When I was in Shanghai, no concerns at all about the domestic economy. Now, when I was talking to the media in Jakarta last week, there were so many concerns over slowing growth in China. And this just shows how it's those economies that are so reliant on trade with China who are going to face the headwinds of slowing China growth. And yes, at the beginning of this week, we had another global economic downgrade from the OECD. And what they really cited was that slowing global trade is going to lead to less global growth. Now, the problem is that they did cite China as one of the major reasons, and it just goes to show how reliant the global economy is on the world's second largest economy and how reliant all of the emerging markets in general became on China. Now, it's not just because of China demand for its exports, it's also mainly because of China being such a huge commodity provider. I mean, the International Monetary Fund only just over a week ago, they downgraded their whole forecast for the sub-Saharan African region. And again, they cited China. So no matter where we're going at the moment, the China economy is in the news.
It really is, isn't it? So much is so dependent on what happens in China. But did it surprise you when you were in China, just the extent to which they're still so bullish?
Absolutely. I mean, it's fascinating, really. In China, okay, they are talking somewhat about the special basket, the yuan being introduced to the SDR, and also, obviously, they were aware of what happened to the Shanghai Composite Index. But in regards to all the other global growth forecasts, people in China are still happy. The domestic economy is doing really strongly. They were spending money. Retail stores are busy. It's just fascinating because you really just see a complete contrast of two different tales of the tape.
It's interesting now you're back in Cyprus. I guess you can reflect, Jameel. You work in the currency space. Let's move to the money now. Where are the currencies?
Absolutely. We've seen the dollar appreciate dramatically against its currency partners over the past week, and that's because we had a really unexpectedly strong employment report on Friday, which raised optimism that the Federal Reserve might finally begin to raise interest rates next month. I mean, the market's now are optimistic that this can happen, and this has been positive for the dollar, but also because of the dirham. The dirham is pegged to the dollar. We've seen the dirham strengthen a lot against the yen, the euro, the British pound. But really, all the markets want to know now is if the Federal Reserve are really going to carry out their repeated pledge throughout this year to begin raising U.S. interest rates. I mean, the next month is going to be very interesting.
Jameel Ahmed's the Global Chief Market Analyst and the Vice President of Corporate Development at FXTM, back in Cyprus after a spot of globe trotting. Hope you get some sleep, Jameel. Thanks for coming on.
Thank you very much.